I'd really like to get a couple minutes for her to really talk about where she is with her company, how she got where she is, and just kind of give us an update on where things are going with KerlyGirl, because it's a really exciting company. So
Thank you so much for allowing me to speak, Brant, on all things KerlyGirl and insurance today. So KerlyGirl is a natural hair care venture that caters to folks with curly and coily hair with our organic and plant-based products. I started the company out of my dorm room at Brown, and during that time would have never thought of things like insurance and contracts and all the things that are necessary for a startup and business to grow. In the time since, taking avocados and oils out of the ratty, we've scaled the company, and right now we're actually considering many things like insurance when it comes to inventory and manufacturing. So yeah, that's where we're at right now with KerlyGirl.
cool. Cool. And as you and I have got to know each other, we've talked a little bit about insurance. Where are you guys now in your thought process? Where's that kind of leading you?
Yeah, so there are so many different things that come to mind when we're thinking about insurance. Insurance for inventory, insurance for our digital presence, insurance for our potential employees, or even coverage within the VC and finance space, or even coverage for retail space for pop-ups. I see that Jolie's in the chat right now. So those are many of the things that as a startup that we've been considering when it comes to insurance coverage. And there are so many different platforms that provide us with options to keep us protected as an entity. Whether it be self-service products like Vouch, or even a broker like yourself, Brant, or Cross Insurance.
Yeah, absolutely. And I think you're spot on. I mean, there are so many things to consider when thinking about insurance. I mean, a company like yours is really complex because you're producing products, you've got cyber because you've got an e-commerce outlet, you've got all sorts of things. I guess to kick it off, to think about insurance, it's really just a financial risk mitigation tool. It should be part of your full-on risk management strategy as a company, right? It's just one element of what you should be considering across the board. So, but it's really about mitigating financial losses that are unforeseen. So, a lot of folks think insurance is a safety net. I think that's kind of a misleading analogy. It kind of leads you to believe, kind of erroneously, that everything would be covered. And that's why it's really important to understand your policies, understand where you are in your company's growth in order to have the right coverage in place, in order to proceed to the next level of your evolution of your company. So, the appropriate time to place is always a question I'm asked, right? So like, when do I get insurance? Is there a milestone? Is there a hard and fast rule? And I've not found one. And really it's because it depends on the business model of the company, really, and what your focus is and where you're going. So one of the things that I say to people, it's kind of hard and fast rule is, kind of get your insurance before you need it. That's always what people always say in insurance. But also, there are some key indicators to look at as you're looking out at the landscape of where you're taking your company. And one of those is probably, are there target markets that I'm going to be pursuing that will require me to have certain lines of insurance, right? So one of those would be E&O, errors and omissions insurance. That's professional liability, it's otherwise known as. And that's really that kind of insurance that protects against abstract loss, not bodily harm or something like that. So an example would be, if you were my client and I sent you the wrong information on the wrong policy, and then you ended up having a claim that wasn't covered, you could come back and sue me and say, hey, Brant, you emailed me this erroneous information about this policy. And then that would come back to my E&O policy because I did send you the wrong information, right? And it's not always about that, it's about omissions too, right? So maybe I didn't put something in there I should have put in there about your coverage. All of that stuff needs to be considered. And E&O is one of those things that you're going to bump into along the way. Depending on your target market, you may bump into it sooner than later in order to participate in some deals. So you want to make sure you're looking out at the horizon to see if that's going to preclude you from participating in opportunities. Because you don't want to, as a founder, get to the opportunity front door and then have to scramble to find coverage. But you also, on the other side, don't want to jeopardize revenue and operations in order to secure insurance. It doesn't make sense. If you're going to say, if you're at that level of revenue where you're going, okay, I have to decide whether I'm going to hire that contractor in order to develop that MVP or my next thing I want to do in my company, my next app or whatever, or product in your case, or buy insurance, don't buy the insurance, right? That doesn't make sense. Build your company and get to the point where, okay, now I'm at a point where I want to get some insurance to protect myself because I have something to lose. Does
Right.
that kind of make sense?
It does. And, in the just jumping off, general liability and using KerlyGirl as an example, right? So we serve plant-based and organic products, and so many of our offerings has foods in them. So when it comes to like refrigeration and the possibility of working with different retail partners, we're thinking about insurance in the case where it's like, okay, if we're gonna keep this in storage for X amount of time, we would need insurance because God forbid it soils and it wouldn't be totally liable on us. So hearing you give more context to that is definitely helpful and insightful.
Yeah, absolutely. So there are a couple of considerations there. One is transportation of those goods and storage, right? So if you're going to take them to a warehouse to be stored in order to be distributed to the stores, that would be called inland marine coverage. And that's something you can secure. Sometimes it's included in some policies, sometimes it's not standalone. You'd also want product liability coverage, and that could protect your product from doing harm. So let's say it does spoil and you don't know, and it goes out there and somebody has a reaction or something goes on,
Right.
or you didn't label it correctly, that there's avocados and there's an avocado allergy, who knows? You may want a standalone policy to protect specifically for those kinds of risks. General liability will protect some of that. You'll have a little bit of product liability in there, but really general liability is really useful if you have physical locations, your brick and mortar storefront, somebody trips and falls, your product does some damage to somebody in the store, falls off a shelf, something like that. That's where general liability really helps. It's that physical harm. Product liability is more specific to your product and what's going on there. And even with that becomes certain nuances. So since you're putting out hair care products, there will probably be certain beautification, like beauty product liability products we may have to look into for you specifically. But there are other considerations for other companies that don't necessarily have that level of complexity. You're producing a really complex product. So you're going to need some different kinds of considerations than somebody else that's doing like a tech or consulting company or something like that.
Right. So I love that you definitely said that because it gets to the next talking point of where does a startup find an insurance, right? So a startup can be considered anything from KerlyGirl, which is a CPG company, to even bringing back Joe. Joe has a retail pop-up startup.
Yeah.
So what would you say would be for someone who has an idea that wants to bring that from ideation to fruition? What would you recommend them in terms of resources?
Yeah, so a lot of options out there. You mentioned one at the top, which was some of the do-it-yourself platforms, which are great. And InsurTech is a big word that's popping up. It's coming out all the time. Everybody's using it. There are some really neat companies coming out who do the do-it-yourself platforms. They tend to be siloed, so they'll do certain sectors of the economy. Like Vouch is really good at tech startups specifically. I'm sure they're going to diversify, and they're doing really well, and they're getting lots of funding. So I'm sure they're going to diversify in other lines. Another one's called Thimble that I've come across lately. Yeah. And then even big global brokers like Aon. Aon's a massive global broker of insurance. It's like, probably as big as they get. And they just launched something called Cover Startups. So certainly are these do-it-yourself options out there, which allow for quick access to probably affordably priced insurance products. The downfall of that is it's a monoline, right? So it's not a monoline, but it's a carrier that is providing that service and that product. So you're getting a single product, access to a single line of benefits. Working with a broker is different. So working with a broker, you're looking for guidance, you're looking for that advisor. If you think of it as your startup, 3 pillars of guidance you're going to want. You're going to want some legal guidance, right? Certainly, and some tax guidance, right? And some financial guidance. So you'll probably have a financial advisor, you probably have a legal counsel. You should probably have an insurance broker on there as well to help guide you and advise you for these things. Because say if you want to get in a different market, you want to take the idea of KerlyGirl and morph into, I don't know, something else, maybe lotions for skincare for babies or something, right? You may need different kinds of products then, or different kinds of liability for that kind of product line, or whatever, So I think what you want to do is think of it 2 different ways. One is, do I need an advisor to help guide me through the complex world of insurance, which would be a broker that has access to multiple carriers and good expertise and client service, right? So you pick up the phone, you're going to get me on the phone, or you're going to get a do-it-yourself model, which is great too, and it's going to provide you access to quick and dirty products that are going to get you what you need to get you over that hump, which is awesome. And I think you're going to see a lot more in the insurtech space coming forward. You're going to see a lot of evolution in that area. We just talked about 3 companies. I'm sure there are 15 I don't know about, but there's going to be a lot more going on. So it depends on what your needs and wants are. As a broker, obviously, I've worked in insurance for a long time, and I came to Cross because they have really good relationships in the market and they take care of their clients. And that client service relationship part was something that I really wanted to see and do in my job. So that's why I came over here. But that's, those are the 2 access points. You can also go to Uncle Bob down the road and see if he's got some insurance that might be able to handle it. Who does your auto and whatever, but they're probably not a good spot to start,
Right. But I love that framework. There being 3 pillars of startup advising: legal, financial, and insurance. So as a startup founder, since I'm moderating this, so what questions would you ask a broker from startup founder to someone like yourself?
All right, so I would definitely ask how many relationships they have in the market and how in depth those relationships are. So, what you don't want is somebody who's got, a mile wide and an inch deep, right? Because they're not going to get anything done for you. Or you also don't want somebody who's going to have like 5 relationships with a couple of carriers, because then they can't expand out and really get you what you need. So if you decide to expand your market, right, and go after different things. So what you want is probably a company that's got, a good number of high quality relationships and is known for client service. So you're going to want to ask these questions like, how many relationships do you have with carriers and how in depth are those relationships, right? And then, maybe set up in the beginning, what's your service level agreement, right? Like enter into this like you would any other contract and say, all right, look, if I send you an email, what's your service level? What's your response time? Is it 24 hours? Is it 5 days? What are you going to do? A lot of big brokers are really good at what they do because they have a lot of good quality relationships, but their client service, you're finding this a lot now, especially with the pandemic, they tend to get the relationship through the front door and then put it in the account management team. So you may end up, because their job is to go out and keep building their what's called a book of business and growing those relationships, because they're paid on as many deals as they can bring through the door, right? And policy volume. And then the account management team takes over. So when you call and you go, boy, I've got this question, you're going to probably get one of 15 people who's going to pull up your policy and interpret it for you, but isn't going to necessarily know you. You know what I mean?
Right.
So it's really important. If you're going to use a broker, the keys are number of relationships, kinds of relationships and depth, and product knowledge, and also expertise. And have they worked with startups in the past? In Providence, I'm building a startup practice. It doesn't mean we don't have any experience. We've got a lot of experience out of our Wakefield office and other offices. I'm just bringing that experience here because we know as a company, there's a great innovation economy in Rhode Island. And we want to support it. Right. We want to be here as part of it. So that's what we're doing.
Right. And so you mentioned that that one of the key questions to ask is what type of relationship that they have working with startups and how in depth it is. So would you measure that by, their financial stage or by the amount of employees they have? So I know with insurance, depending on what type of insurance you need, there's so many different metrics. Would that be the case for a broker?
It would be more, I'm saying more like I'll use Cross as an example just because I know it really well. So we've got over 100 carrier relationships, right? That's a decent size. It's not, 1,000. It's not 10, right? Which would be probably too small. It's over 100, which means that we've got clout with a lot of different, what they call markets in insurance.
Right.
So that means if you need general liability, I can go to my marketing team and go out and find a couple of different providers that we have good relationships with that will understand who we are and partner with us when it comes down for a claim. So insurance is worthless. It's nothing until there's a claim, right? And if you have a claim, that's when the reality hits and like, wow, what did I really get? And you want to make sure you've got a trusted advisor who's going to walk you through that claim and have leverage with a carrier to say, look, this is what happened. This is the reality of it. This is how we're interpreting the policy. We see that you may or may not deny this claim, but based on the merits, we think it should be approved because of X and Y, right?
Right.
That's the kind of relationship. And the way to evaluate that is finding out, all right, so the number of relationships is one metric, but how in depth are those relationships by asking these questions like, all right, so when it comes down for a claim, what's your process, right? As a broker, do you forward me on to the claims processor at the insurance company and then, help me navigate this? Or do you actually walk me through the claims process? Like ask that question. How do you handle claims, right? What's your role in a claim as a broker? Very important. So it's not hard and fast stats. It's more squishy soft skills, but those are really important if you're going to be working with a broker.
I mean, this is a great time to open up the platform because I see that there's a hand raised, to open up the conversation to other folks. So John would like to speak.
With regards to the insurance, as it is based on a annual fee or quarterly fee, does the quality or the what you're referring to as the services and the coverage and everything change with what is going on with the company? I mean, do you notify them, or is there set parameters as to when things will have to adapt or have to alter because of the fact of the company changing?
Yeah, I think I get what you're asking, and it's probably a few different questions actually bundled into one. So one is if you've got, I think the first was if you've got a company you're going with and they're asking for annual premium, if you're going to pay that premium up front, if you're going to pay installments, is there a service level difference? There shouldn't be. You're paying the premium, you're agreeing, you're binding that coverage, you're signing a contract with that insurance company through the broker that you are going to be paying that premium over time or at once. So there shouldn't be a level of service difference. In fact, at Cross, we work with a number of providers who can take daily, like monthly payments, or we can even finance premium. We have a program for that for companies that need that kind of thing. So there shouldn't be, A, and B, in terms of carrier changes and policy changes, because ultimately the carrier has the right to change their policy pretty much at any time. It's written in the contract. It's our job as a broker to make sure you understand those changes, and if that is something that needs to be changed because it no longer meets the risk that you're looking to mitigate, then perhaps we need to switch companies and figure that out. So that can either be done at a renewal time and say, okay, we're going to take this business and move it to another carrier, and we've already got that lined up. Or we can do it, if we have to force an expiration, maybe we do that. But it would take a lot to do that. But we would have to understand what the changes are to the policy and convey that to you in a way that makes sense, and then take action as needed. Because ultimately we work for you, you're the client, not the insurance carrier. The insurance carrier is another element of this, but my responsibility is to you, my client. The insurance carrier is there to service both of us, basically.
Well, the reason why I asked, sorry, no other hands, what you call, like I said, I run a clean tech development business, and because of it, I'm seeking funds to get things really into market. And here's an example: is that there was a green auto, what do you call, race to enter the best fuel efficiency or best whatever. And I was going to enter it because it was going to go cross country in the US. The fact that any motor vehicle or vehicle on the road requires insurance, and the sponsor of this was Progressive, I asked Progressive to what are the parameters for their insurance, because of the fact that here we have a bunch of experimental vehicles that are going to be out on the road. How or what can you cover, because of the fact that it's, they're not combustion engines. They use some other thing, and they don't have all the safety parameters, so say, as far as structure and structural integrity and stuff. So they didn't know Jack, and I don't know how that race went. I didn't get to qualify to enter. And now it, in the same sense, when as I try and develop and get things done off the ground, and incorporate other companies to use my product, or to you help me validate it so they can get the funding, because it's green tech. Green funds are available all over, so they can make money, save money, and we all make money, and we all basically benefit. And like I said, the insurance companies, you're only the broker, though your services are to look for my interest. How is it in the market of insurance companies? Are there ways to be able to cover everything that is coming up and coming in the new year and the future, or that we'll need into the future?
Yeah, so really interesting. So a lot there to unpack. I think for the example you're using of the race, there's some liability insurance that should be provided as the event holder. Like, so in a former life, I was a ski coach, and I've hosted ski races, and I'd have to have insurance on the hill in order to host that event. So I have some insurance knowledge on the event itself, and had to make sure there's liability, so the folks who are in it aren't going to sue me as the race administrator or whatever, host. So there's some of that, but also as the participant, they should have had requirements to participate in that event from an insurance perspective. They should have said, you need X amount of liability, you need this, you need that, in order to even sign up. Because we would have to do that even, I'm talking like a ski race. We'd have to do a ski race. The coaches would have to sign up and say, okay, I waive this, or I have my insurance, my NCAA insurance, whatever it is. So anyway, the long and short of it is, if you go to those events, ask them for their insurance requirements ahead of time, and then come to me or another broker, and then we can try to figure out how to parse that for you and say, okay, this is what you're going to need. This is what the simple language is, because it's probably going to be written in legalese and make no sense to most people anyway. There's that. On the other side of it is, what are these insurance companies doing to catch up with tech and green tech and this? So there are a lot of lines of insurance out there right now that are evolving with this, which makes it really exciting to actually be. It's a really exciting time to actually be in insurance. It's hard, people laugh at me at saying that, but it's really a cool time to be in this industry. It's been a long time stagnant. It's been serving clients, in my view, probably poorly, with the same products over and over and over again. It's now time to innovate, and there's a lot of pressure on the industry to do that. And there's a lot of innovation going on in products that are going to be covering these things as they go forward. There's got to be. These insurance companies aren't going to sit around for very long unless they evolve. So we have access to a lot of really good providers who are on that kind of cutting edge. One provider to look for is Chubb. Chubb does a lot of really good innovative insurance products. And there are a lot of other carriers out there that we've got good relationships and other brokers do. But anyway, I hope I answered some of your questions, John. But if you have more, if you want to go in depth with that, feel free to reach out to me. I'm happy to talk it over anytime.
I kind of have a follow-up question to Brant, I'm sorry, but like, at what point do I need to check back in with you? If I sign my initial kind of insurance, like, do you check in with your clients on a quarterly basis to see, especially in the startup scene where, 1 month you could sell 1,000 products and 6 months later you're selling 1 million? Like, how do you?
Yeah, that's a great point, Amy. So I try to set it up with my clients that they, and I can see Bradley actually at the top of my screen, it's one of my clients, but Bradley and I were texting today, but it's really up to the relationship. So some folks, are like, hey, I'm good. I don't want to talk to you. I'm just focused on building my business. Others, you're going to want to set up a monthly or a quarterly call or whatever works. Some will want weekly if they're growing that quickly and they want to make sure they've got coverage, they're evolving, right? One thing to look out for is what's going to be mandated as you go forward, right? So you start bringing on employees, you're going to need workers' comp. You're going to need it, right? You're going to need it in order to hire employees in most states. It's a mandate from state law, right? So you need to get that coverage. You need to get it quickly. The other is, I'll just say off the top of my head, like workers' comp and employee benefits plans, right? So now you're going to have employees, you're going to want to attract and retain that talent. So you're going to want to make sure you've got somebody who's strong on the employee benefits side. So all these things are things to look out for as you're going up the chain and growing your business. Really important to keep an eye on. And maybe you do set up weekly or quarterly or monthly calls, whatever the cadence that is mutually agreed upon. And then you have to stick to those. A lot of times you'll find that people say, I'm just going to boot this call because I have nothing to talk about. Well, you're always going to have something to talk about. So if you set up a half-hour call, drop it to 15 minutes, and just make sure you're checking in. And as a client, you want to make sure you're comfortable with that contact level, Amy. So as you look out there, or Kerlyne or anybody else making a startup, you want to make sure you've got that comfort level. It's not overburdensome that you're in contact with your insurance person all the time. You don't need to be. But if you want that contact, make sure you're able to do that. That goes back to that client service level that should be mutually agreed upon at the start of the relationship.
Do general liability insurance policies typically cover event liability, or does that vary on the event and the insurance policy you have? For instance, if your business consists of hosting events at various venues, should you get multiple insurance policies, general, or one for each event?
Okay, so a couple different things here. If your business is focused on building events and hosting events, you may want to find general liability coverage that specializes in that to make sure that you've got coverage for that. So that's really important. So the other part of it is event coverage itself. So I've done a fair amount of this in my past life with my former employer. Event cancellation is something that's really important to have. That's a standalone policy. You can find some that do an aggregated approach where they say, okay, I'll cover all your events in a year. They'll charge you per event, but you'll pay one premium, and you just have, if you add more events, you can add more events to your policy per se and probably pay additional premium. There are others where you're going to want to insure each event separately because each one is got its own specialty. Maybe some are in vineyards, maybe some are, so I hope that answers your question. Feel free to come off mute if I need to go deeper on that, or you can always reach out to me after too. We can talk about event and your specific business too, if you need to. Cyber is something you hear a lot about. It's something that startups should really consider because you can't really open your phone these days without seeing something about cyber happening somewhere. Sadly, I think most cyber incidents are probably not even reported. We don't even hear about them in media. So it's probably a lot more prevalent than we even know. And it's something that really I'm recommending all my startups, all my clients get a standalone cyber policy because it's just the bad actors are out there. They're not going to stop. And whether or not you have an e-commerce platform or you're just using email, you have an opportunity for these folks to get into your system somehow or do something to you. And cyber is really cool because it has a reputational risk element to it as well. So a third party element that's pretty unique in insurance. So it'll help you kind of with that PR side of it too, and help when there is an incident to help protect your clients that you've got downstream. So cyber is really important. We didn't really touch on it earlier. I just wanted to mention it, that it's something that startups should really consider.
I do have a question about cyber, because we keep hearing about companies. Oh, sorry, I just messaged it to Kerlyne. Sorry. We hear about companies like, oil pipelines and things kind of getting these ransomware attacks and paying out millions, if not billions of dollars. Is cyber insurance really expensive to kind of cover that? Or how does it work for small proprietors, startups, small businesses?
Yeah, so on an average, what we see here is between about $3 and $5 million limits, which sounds like a lot of money for insurance, or a big limit. It's not a huge limit in terms of a cyber attack. Some of these bigger companies, like you mentioned, the pipeline, and then there was the one that was the fundraising software for higher ed. These are incredibly disruptive to full industries and to our whole supply chain, the oil pipeline and the food manufacturer. So these are massive events. What I was saying earlier, Amy, I think most of the cyber events I think most of them probably don't get reported. I think small to mid-sized companies go along, they probably don't have any cyber insurance, or if they do, they're too worried to submit a claim. And the bad actor gets in there and they want $25,000 or 50 grand to give them back their data, which to a big company is not a lot of money, but to a small company is significant, if not damaging their bottom line. And they end up paying it just because they want to keep going, growing their business. And they feel almost like shameful it ever happened to them, right? When meanwhile, it's going to happen. It's not a matter of if, it's, usually they say now it's a matter of when. And I think I saw Richard on here. He's at a company called Cyberlytica. He's on LinkedIn all the time talking about cyber events, and he would know more than even I would. But I'll tell you what, it's something that everybody should consider. We found a really interesting market, a great carrier, very well renowned. These folks are kind of new entrants to the cyber game, but they're providing really good coverage for small businesses, about $500,000 in limits, and it's not that expensive. It's around $1,000. So in the scheme of things, not insignificant. I mean, $1,000 is a fair amount of money, but it's also very helpful when you get a $500,000 limit for that amount of money, right? So if you think of it, it's a good protective measure. But like any insurance, it's one element of your risk management strategy. You should have multi-factor authentication. In fact, most insurance providers ask for that, especially if you're at higher limits. They want that kind of technology embedded. Other things that you're going to want, regular trainings. How do you do the phishing trainings with your employees? How to spot bad emails. Typically what happens is somebody shoots a nasty email in there and somebody opens it up because they're excited, right? Hey, I got this contract, let me open it. Boom, and next thing you know, it's not a contract, it's a virus, and somebody's sitting in your system and you wouldn't even know it. They're going to sit there for a bunch of months watching what's going on and wait for you to get maybe funded or something, and then pop out of the woodwork and go, hey, here I am, I'm going to hold your business accountable, hold it hostage until you pay me whatever amount of money. And you either claim your insurance and have them deal with it because they get the legal team to do that and negotiate with these folks, and or you pay it yourself and just not file your insurance claim depending on the amount. But it is really something, and small to mid-sized businesses are a hot target for these bad actors. They're going after them because they don't have sophisticated legal teams. Many of them aren't covered with insurance, and if they are, the bad actors feel like, oh, that's good. They're covered by insurance, not bothering them at all. I'm going to go right after the insurance company. They're going to pay. Well, it's not really that easy, So you really want to have a good carrier, and you want to look at their AM Best ratings. AM Best is a regulatory body that measures, how good of an insurance company, how responsive, how good they are at claims, what their service level is, what their reputational risk, reputation is, all that. You want definitely A plus, A better, to have as your insurer across the board. If you're going to do that for your auto insurance, I would look at AM Best ratings and see what they've got or whatever. So anyway, sorry I went on for a long time there, Amy, but hopefully I answered your question.
No, that's really comforting to know that you can get a fair amount of coverage for not an unreasonable amount of money.
Yeah, I mean, small businesses are typically hit with $25,000, $50,000 ransoms, right? Not insignificant, very significant to a small business, in fact. But to an insurance company, that's probably why many of them don't get claimed. They just go, okay, I'll pay it, put it on my credit card, whatever they're going to do, and drives them into debt, drives them crazy, but allows them to continue on their business. Hopefully they don't. Hopefully they claim, because the more they claim, the more we get to know about what's going on out there as an industry and as a society, really, with these folks. And there are whole business models of companies designed around this. Just like IP, right? Intellectual property, the patent trolls, the non-practicing entities. Those folks, all they do is sit around and scoop up patents and then wait for a company to pop up and say, oh, you're infringing on my patent, and then drag you into a lengthy lawsuit that's very costly. And it just goes along until you get tired and say, okay, as a founder, I'll just pay this thing to make it go away, right? And you do, and away it goes. And maybe you did, or maybe you didn't have insurance. If you have insurance, the cool thing is the provider we use is interesting. One of the providers we use, they have defense and offense. So basically that means, like, if you unknowingly are infringing on somebody's patent, or somebody comes to you and says, hey, stop doing what you're doing. I've already done this. Here's my patent, right? I'm going to sue you to stop doing what you're doing. You have coverage for that. The other side of it is offense. So as you're out there and you find somebody doing something that looks like what you're doing and pops up, you can say, hey, go talk to these folks because they're infringing on my rights, my patent, right? And then the insurance, the right provider, would actually go after them and say, hey, their legal team would go after them and go, hey, you're infringing on our clients, in this case, our insured's patent, cease and desist. So both of those deal with bad actors, right? I'm kind of lumping them in the same kind of spot, because they're defensive measures that go after protecting yourself from financial losses due to these bad actors who are out there actively pursuing this stuff because they have business models to do it. And they've been successful, honestly. So, and they're going to continue to be successful. Unfortunately, the pandemic, with the downsizing a lot of businesses, they had to sell their patents as their last asset, right? And so these patent trolls just scooping these things up and waiting for companies to pop up and go, oh, you're doing what I did. Here's my patent. You didn't do anything. You just bought a patent. And you've got a code on it, and next thing you have a lawyer on staff. They write a letter, and now you're stuck in this nightmare, this legal nightmare for a long time. It's not all doom and gloom, guys. I don't want to sound that way. It's not that way. Yeah, startups are great. You guys are going to do fine. There's not going to be this. There aren't like sharks circling and people in these dark alleys waiting to hack in your systems. But if they're there and they're going to do that to you, get some good insurance to help you navigate it if it happens. That's all.
But I love the automobile reference you use, because I think that's a really important one for a startup, right? So we know that, with startups that are raising capital, that are trying to scale aggressively, that so many things can happen along the way. Not saying that you want to get into an accident, but anything can happen. So it's good to have insurance like you would have with your car insurance.
Yeah, it's a financial risk mitigation strategy that deals with unforeseen incidents, right? So like anything, you want to have insurance before you need it. That's the bottom line. I mean, you're not going to, like the homeowners analogy, they use that too, a lot of insurance, right? You don't buy homeowners when your house is flooded or on fire. You buy it beforehand. So in case it does get flooded or on fire, you have coverage to help make yourself whole again. And that's all it is, guys. It's not this isn't some mysterious world out there. There are a lot of resources out there, like brokers or the do-it-yourself platforms, or a lot of self-help stuff you can look online. But there's a lot of help out there. What I don't want to see is a lot of startups out there not considering insurance because it's some mystical thing that they don't really understand or don't know when to get to, and all of that, because it could be putting them in jeopardy or keeping them out of deals that they should be pursuing because they don't have the right coverages in place to even participate. And that's kind of crazy. And then the other one is when you mentioned, somebody mentioned funding along the way. Funding, they're going to require directors and officers insurance. It's going to be in the term sheet from the venture capital firm. And it's going to be right there in the contract. They're going to ask you to go out and get it as a founder. So you're going to need to know where to find it. You're going to need to know, what you need. It's going to be based on your revenues, your business model, areas of focus, sometimes location, all sorts of different things. So, but basically that's there to protect the fund from its portfolio companies, from that risk. So the decisions that the director is going to make, being on your board seat, is going to be protected. They want that insurance to protect them from basically the fund, protecting the fund.
I just want to end the conversation with saying thank you so much, Brant, for providing us such a comprehensive view on insurance, especially for startups like my own and many of the startups that are in this chat and within Rhode Island. I started having conversations around insurance earlier this summer, and that's when I became aware of how important it is to have insurance, just like it's important to have an accountant or an attorney. What I can say is that, insurance is integral to building out your back end. You cannot be operating a full company without having protections for that very company on an intellectual property side, but also just on a risk mitigation side and for your employees and the folks that you contract.
Well, thank you. And it's been great to get to know you over these last couple of weeks. Let's continue our conversations. But, I'm here as a resource, guys. We are, we're in the community right here in East Providence, but, we've got over 50 offices up and down the East Coast. So we service clients all over the place. But I'm here to help. I'm a resource. That's how I view this. And I view my relationship with my clients as a partner, not as a supplier of something. It's really a provider of information and consulting services that we do. So let me know if I can help. I'm happy to look at policies that you guys might be looking at or seeing out there. If there's any confusion, about what kind of insurance, when I should get it, feel free to reach out. It's all good. Let's just get through it together, right?